Last week, Alibaba reported their latest round of quarterly earnings, and despite slowing economic growth, zero COVID policies, political tensions, and countless other macro headwinds that have been a real challenge for Chinese businesses and a real weight on Chinese stock prices, there were actually a surprising number of positive things to take away from Alibaba's latest numbers. In this video, I want to cover some of Alibaba's latest financial results, how each of their individual business segments are performing, and I'll also take you through some of my key takeaways and highlights from the hour-and-a-half long conference call with management that happened alongside this earnings release. If you enjoy this video, be sure to subscribe for future content if you haven't already, but without further ado, let's get straight into the video. Now, the first thing I want to say right up front in this video is that this particular quarter for Alibaba and for a lot of Chinese businesses is really not a normal one, and I think in many ways it's going to be challenging for us to take these numbers and extrapolate them forward and say that that's, what the future is going to look like for these businesses. They have been genuinely operating in a really harsh environment for the past couple of quarters at least. And a lot of the zero COVID policies and things that have been happening in China have been real drags on parts of Alibaba's business. And although growth has certainly been a lot slower for Alibaba than it has been in previous years where they were growing at 30, 40, 50% a year for a long period of time, it's been a very good run through of kind of testing the resilience for a lot of Alibaba's different lines of business. And I think Daniel Zhang, the CEO of Alibaba, put it best in his opening remarks on the conference call where he said, "We believe that COVID will ultimately pass and that our society, our economy, and our lives will eventually return to normal, and that the massive potential of China as the world's second largest economy will be further unleashed." He also said, "We believe that the platform economy that Alibaba is part of can make unique and valuable contributions towards serving small and medium businesses, creating employment and the pursuit of better lives." And there was a really good question on the conference call this quarter that was put to the management team at Alibaba, basically asking what would be the impact of relaxing of, lockdown restrictions and rules in that area. And I'll get to that kind of in the back half of this video. So, in terms of some of the headline numbers for Alibaba, let's walk through some of the highlights and lowlights in that area. So, firstly, revenue grew 3% year over year for the quarter. Like I say, that's much slower than growth that we've seen for Alibaba in previous years, but there's also some pretty weird stuff going on in the environment that they're operating in. But revenue was up 3% year over year. Income from operations was up 68% year over year. They experienced largely stable margins in a lot of the really big businesses at Alibaba, like their Chinese e-commerce and platforms like Tmall and Taobao. But a common theme kind of right throughout this quarter has been much stricter with cost control and also stemming the losses on the number of businesses at Alibaba that are still not big enough and haven't scaled up enough to be at a level where they're profitable. Adjusted EBITDA, which is kind of the profitability metric that Alibaba report through a lot of their results. I know there's better ones like free cash flow and so on. We'll get to that shortly. But that metric was up 29% year over year for the quarter. And net income attributable to ordinary shareholders was negative 20.5 billion RMB. And that number to me is basically irrelevant. It's similar in many ways to what we see at Berkshire Hathaway, where the stock portfolio value kind of flows through the income statement now for Berkshire. So in a quarter where the stock market goes up, that looks like Berkshire is more profitable on the income statement. When stock prices go down, it looks like Berkshire are losing a huge amount of money on their income statement, and it's really not a true reflection of the underlying operations of the business. So we see a similar impact here with Alibaba. So if you see a super high P ratio or something on Alibaba's stock, that's kind of what's going on. They've had a continued decrease in the mark-to-market value of a lot of their equity investments, which did flow to a negative net income number this quarter. But for all practical purposes, I think we're probably best to focus on their income from operations, operating cash flow, free cash flow, and the like. Now, Alibaba at this point has been experiencing a reasonably long-term kind of ongoing squeeze on margins, and they did share a lot of their sort of cost structure data in this latest earnings update, and I think there were a lot of kind of positive things to take away from that section of the earnings results. So, as a percentage of revenue, their cost of revenue, or cost of goods sold as it's sometimes called, was flat at 63%. Their product development costs as a percentage of revenue was down from 6% to 5%. Sales and marketing as a percentage of revenue was down from 13% to 11%. And general and administrative costs were flat at 4% of revenue. In terms of balance sheet health and the company's ability to generate cash flow, things still look really positive at Alibaba. So in this quarterly result, they had a net cash position of $45.5 billion US dollars, which I believe is about 20% of their market cap at this point. So a lot of cash still lying around. And the underlying businesses are still generating good cash flows. So they had operating cash flows despite all these headwinds of $6.6 billion US dollars in the quarter, and free cash flow of $5 billion in the quarter, which was up 61% year over year. There's also been some interesting changes in capital allocation at Alibaba, and I'll get into that in a bit more detail later in the video. But put very briefly, they have significantly cut down the amount of cash they're putting towards acquisitions. So in the same quarter last year, they spent 21.6 billion RMB on acquisitions. That number was down to 2.37 billion RMB in this quarter, so about 10% roughly of what it was at the same time last year. They also gave a couple of updates around share repurchases or share buybacks, and they kind of continue to scale those buybacks up. So they spent about 1.94 billion US dollars of cash flow on share repurchases in the quarter, and subsequent to the end of the quarter, on the conference call, they mentioned that from the 1st of October to the 16th of November, they've repurchased another 2.6 billion US dollars of stock. Alibaba has about a $25 billion share buyback program ongoing, or they did before this quarterly call. They've spent about $18 billion of that, and they've just increased that buyback program from $25 billion to $40 billion, and also extended the timeline out to 2025. So share repurchases seem to be a continued kind of destination for cash and a continued focus at Alibaba. And for the first time, really, we're starting to see the shares outstanding actually decline for the business, which is great for long-term shareholders. That means each individual share represents a larger ownership percentage in Alibaba. And it's typically been the reverse at Alibaba. They have tended to issue a lot of stock-based compensation. The shares outstanding have kind of drifted up over time for a pretty long period now, and they still issue stock-based compensation, so that's kind of fighting against the buybacks a little bit, but we are starting to see the total shares outstanding kind of come down for the first time. Now, in terms of some of the individual segment results, and keep in mind some of these segments are much larger than others, let's go through kind of some of the numbers there. Now, in terms of China commerce, which is the main driver for Alibaba's business, revenue was down 1%, adjusted EBITDA was up 6% year over year, and the EBITDA margin went from 30% in the same quarter last year to 32% in this quarter. They said that margins were largely stable at Taobao and Tmall, which is their kind of two major platforms, but they said there was significant loss reduction in some of their other e-commerce platforms like Taobao Deals and Freshippo. Similar trends in their international e-commerce arm on platforms like Lazada, AliExpress, and Trendyol, and our revenue was up 4% in the international commerce segment year over year. This is a loss-making component of Alibaba's business, but the losses were stemmed significantly. So EBITDA margin went from negative 16% to negative 6%. They said that loss per order, for example, at Lazada has narrowed 25%. So there's a lot of cost control type initiatives happening at some of these businesses. Local consumer services, which includes things like Alibaba's food delivery segment. Revenue was up 21%, adjusted EBITDA up 47%, although this again is still a loss-making business, this one quite a significant loss-making business. So EBITDA margins went from negative 60% to negative 27%, so still not particularly flash. And that's kind of a common trend at Alibaba. Oftentimes they try to scale these businesses really fast. That does often come with losing money, and then they tend to kind of focus on profitability later in a particular business segment's life cycle, but that's where things were at for local consumer services. Kainao, which is their logistics business, revenue was up 36%, and they were EBITDA profitable. So they had an EBITDA margin of negative 3% at the same quarter last year, and that was just kind of profitable on that basis, a positive 1% margin in the latest quarter. The cloud segment, which includes not only their cloud services through Alibaba Cloud, but also platforms like DingTalk, which is kind of a Chinese equivalent to a software like Slack that's used in many kind of parts of the Western world. Revenue was up 4%, adjusted EBITDA was up 10%, and margins were flat at 2%. And that segment, again, has been growing a little slower than I think a lot of people probably had anticipated or hoped for. And again, they've kind of had this continued trend of losing a lot of money from some of their larger customers. The number one customer, at least previously, I believe, was ByteDance, which is the parent company of TikTok. They said that in the quarter, revenue from internet industry customers was actually down 18% in their cloud business, and that was mainly due to declining revenue from their top internet customer that's gradually stopped using Alibaba's overseas cloud service. So I believe that is still ByteDance and TikTok, who've started using Oracle cloud services and also Amazon Web Services. So that churn in some of the larger customers has really pulled down the growth rates in recent times for Alibaba Cloud. A few kind of closing comments from the CFO after presenting some of those numbers. He said there's kind of three things that they're really focusing on. He said they're prioritizing profitable growth. That was kind of a trend we saw right through a lot of the segments, stable to modest revenue growth on a lot of different areas for Alibaba, but quite good margin improvements. He said also optimizing capital resources by doing more selective M&A or mergers and acquisitions and unlocking the value of selected subsidiaries. Again, I think we saw that pretty clearly in a big reduction in the spend of cash on new acquisitions. And he also said they want to better align business performance to the interests of long-term shareholders. He noted that in financial year 2022 and the first half of FY 2023, 70% of free cash flow has gone towards share buybacks. And like I noted earlier, the board of directors has recently boosted the share buyback program at Alibaba. Now, a few highlights from the Q&A section of the conference call with management. I think definitely the best question that got asked there was, how would COVID restriction changes impact Alibaba? Does Alibaba have a plan in place for it? If there are significant rule changes, and I think what the person was getting at here was if the rules were relaxed significantly, what would that look like for Alibaba's business? And the management said, we hope to see a return to normal. There's nothing people want to see more. Alibaba is diverse and different businesses would change in different ways, but in terms of the consumption part of the business, they basically said it would be a big boost to consumer confidence, spending, and economic growth, most likely. So they basically said it would be good news all round for that part of Alibaba's business. They also said you'd probably see a bit of an impact on product mix and where consumers are spending their money. A lot of cash right now has been put towards, essential items and kind of stocking up during some of the lockdowns that have been happening. He said you would probably see more discretionary spending if a bit of consumer confidence came back and that type of thing. And on the cloud computing front, they said enterprises pretty much across the board understand that digital is the future, but they also said how much they will invest in digital initiatives is also very dependent on how confident they are in the long-term future of their businesses. So they said after the pandemic is over, they expect future resources, going towards digital initiatives and cloud spend and the like. There was another interesting question on kind of Alibaba's long-term strategy in the conference call. call. Question was, Daniel, in your prepared remarks, you spoke about how Alibaba's long-term development is well aligned with China's long-term development strategy, including digitization. How do you see digitization playing out in China over the next 5 years, and what kind of financial returns can Alibaba reap? And he said, basically, big picture view, Alibaba are kind of focusing on three things. So cloud computing, consumption, and globalization. He said Alibaba is well positioned to become a key player in digitization. They were pioneers in digitizing e-commerce many years ago, more recently in the logistics business, and in the past 5 or 10 years in cloud computing, with both private companies and kind of public service being parts of the cloud business. They said going forward, we're highly aligned to harness the benefits of digitization, and they're encouraged by the policy direction and comments from state authorities in that area. And finally, in terms of conference call highlights, they did get a good question on Cainiao, their logistics business, which had quite good revenue growth for the quarter. The question was, Cainiao has had 36% revenue growth in the quarter. What's driving this growth? You also mentioned that over 70% of Cainiao's revenue is now external. Is there potential for a spin-off of Cainiao? And they said that the biggest contributor to the growth was local consumer services. They said their service offering has basically become more broad. Part of that, by the sounds of it, is to do with regulation, and I'm not too sure on the specifics there, but they did mention that. Another thing they mentioned a couple of times throughout the conference call is that they have had a bit of a leap up in the amount of returns that customers are making, and they sort of gave a couple of reasons for that. One is the type of buying that people seem to be doing. So live streaming, for example, has been growing very fast as a way for people to sell products, and it sounds like returns from live streaming tend to be higher than when consumers buy in other ways. And they also seem to have just made the customer experience for returning products actually a little smoother. So that perhaps explains a little bit of the growth here as well. They said they've got far better customer satisfaction, and again, some of that was all to meet regulatory requirements, some of the changes they've made. They said Cainiao has been independently operated within the Alibaba family since establishment in 2013, and also has other shareholders involved. Alibaba owns 67%, but obviously not 100%. Over the years, major investments have been made in last mile delivery, including centers on campuses, villages, and building capacity and cross-border as well, and it will continue to operate independently. So they didn't actually comment on the spin-off part of that person's question. I don't know if that was lost in translation a little bit. Sometimes the questions on the Alibaba conference call are asked in English, and then there's a translator, and sometimes they're not in English, and then they're translated back to English. So I don't know if that part of the question was lost in translation, but some interesting takeaways in terms of the logistics business for Alibaba. So in terms of some of my overall thoughts on the latest numbers out of Alibaba, I think there's still a lot of major headwinds for Alibaba's business, and hopefully the short term, and I still don't think we can take a single quarter's results and extrapolate that forward. We saw single digit revenue growth, which is really not the Alibaba of old, but we did see some great improvements in margins, and I think we've probably just got to give this one a little bit of time to get out the other side of some of the things that are happening at the moment to see the true kind of normal environment type performance of the business. But there were a lot of good kind of positive takeaways for me from this one. We had margin improvements pretty much across the board. We had some pretty major changes in capital allocation, and I think they are pretty much entirely positive. So, less money spent on acquisitions, which for investors are, for the most part, kind of hard to judge exactly how profitable and what kind of returns you'd get from different acquisitions. And a lot more cash going towards share buybacks, as the share prices come down, which is cool to see. They also had a lot of good cash generation. Free cash flow and operating cash flow was strong, and the net cash position is about 20% of Alibaba's market cap at this point. So those are some of my highlights from the latest quarterly earnings out of Alibaba. I do hope you enjoyed the video. If you did, please subscribe to the channel if you're new here. But that's it from me for this one, and I'll see you on the next video. Cheers.